Hello, good evening. It's Adil Fazal here, market analyst at CFDs.com, bringing you a review of the European markets on the Monday, the 1st of February 2016. Be sure to visit CFDs.com for your trading needs. As always, I always constantly remind you that there is the potential cash bonus offer of 25% that you can certainly take advantage of. So certainly visit the website www.cfds.com and explore the actual products and services that are on offer. Alternatively, you can visit the educational site, which is www.cfds.education, to certainly learn more also. Okay, right, a market wrap up. Let's just see exactly how the European markets finished. Now, we had the Chinese markets down overnight, and we had the Nikkei obviously higher. So a mixed set of results overnight. Now that obviously led to the European markets finishing negative, although the FTSE did hit a intraday low of 6060, and the actual DAX hit a low of 9640 gap fill. Now the CAC certainly finished low, so all are down across the board by almost half a percentage. Now the US markets, as we speak, are currently negative as well. The concerns with regards to weaker US data is certainly weighing on the market. So that's certainly something to take into consideration as well. So a weaker dollar will help the commodity side of the equation. That's certainly, and is also propelling the Euro USD higher as well. Although we've had Mr. Draghi, and I'll discuss exactly what Mr. Draghi has said. Okay, let's try sum this up now. In terms of economic data, first of all, we've had the economic data that came out of the European markets today. We had Spanish and German data actually beating expectations. The German DAX actually fell on that news, and that was mainly because of the potential comments from Mr. Nowotny, although Mr. Courier was very dovish. Now, also the concerns with regards to oil as well, so oil certainly was a contributing factor with regards to that potential weakness as well. Okay, so let's try and sum this up. Okay, so with regards to European data, that certainly came out weak. The Spanish and German was strong, but the Eurozone as a whole, the manufacturing PMI was weaker. The manufacturing PMI for Jan certainly came out in line more or less, basically, and one number came out weaker. Okay. The Italian certainly came out, or the French, should I say, came out in line. The Italian was certainly weaker. Now, the UK data certainly came out strong, came out 52.9, so certainly came out stronger than expected. The market PMI as well certainly came out strong. Net lending certainly came out in line, more or less. Mortgage approvals certainly beat expectations, but that still caused the FTSE 100 to sell off, breaking below the 6,000 level, and I'll explain exactly why that occurred. Okay, so we've had the personal consumption expenditure out of the US came in slightly higher. Core personal consumption expenditure came in flat. Personal income slightly better. Personal consumption expenditures, including the price index, month on month. Personal spending came in weaker as well. The market PMI came in weaker. ISM manufacturing PMI slightly in line or potentially higher. And prices paid came in weaker. Construction spending as well certainly came in weaker. Now, US data certainly weak overall, and that obviously sent the indices down to a large extent and caused the weakness. Now, Mr. Draghi did save the day with his pro-QE speech and certainly did inflate the European markets to a large extent, which we'll discuss very shortly. Now, we've had Mr. Fisher with his dovish comments as well with regards to a potential talking down of any further rate hikes. Again, that will obviously help support the actual QE traders or the stimulus traders or those that are expecting rate hikes to potentially be postponed. That will certainly help that trade. But for now, the actual comments from Mr. Fisher certainly have helped the US markets. Now, let's try and decipher exactly where this market stands. Now, bear in mind you have China down overnight, weaker Chinese data to contend with. Oil prices certainly lower, although they are coming into support now. You've got the failed inverted head and shoulders formation on the price of oil, so that's certainly something else to consider. You have potential support on oil in these regions here. Okay, so that's something that we're going to observe and watch. Although you still have to respect the fact that you do have higher highs and higher lows for now. That's the price of crude. Let's bring up the price of Brent and see exactly where Brent stands. given the fact that it's quite sensitive. Now the 4-hour chart of Brent certainly is coming into potential support. The 60-minute chart at the moment has broken out a key diagonal trend line, has held that resistance zone above, and the next level of support is going to be in this region here around the 33.5. so that's something that we're going to watch out for. Okay, so oil certainly is positioned. Now copper certainly has enjoyed a rally, given the weaker dollar certainly helping copper, although weaker economic data will not. Okay, so that's certainly something to take into consideration as well. Okay, so I think the biggest stain in the afternoon really, or the biggest bearish argument, is the fact that we had weaker US data, and that obviously will fail to propel the US markets higher, especially given the fact that personal consumption data on Friday certainly supported the consumer, and obviously today's data is no longer doing that, I'm afraid. So that certainly is a cause for concern, okay, from a trading perspective. Okay, so we have weak data to contend with, weak Chinese data, more or less weak data overall. Only positive was the Spanish data, and the German data slightly beat expectations, so by 0.2. So nothing really to get overtly excited about, other than the fact that Mr. Draghi and his QE speech, and that will certainly keep the actual European equity supported to a large extent. Okay, now let's see where the equities are positioned, and let's see exactly where they are going next. Now, bringing up to start the chart of Eurostoxx first of all, you are still holding that this bearish channel. You do have the unfilled gap to be closed at 30.70. Now, given Mr. Draghi's pro-QE speech, expect that to be closed. Now that certainly will support the move higher in European equities. You still have this inverted head and shoulders with a target of 3115 that still needs to be hit. Okay, you have unfilled gap that needs to be closed as well at 3070. So certainly bias on the upside. Okay, so certainly putting in a higher low or building a potential higher low here on the 60-minute chart. The 10-minute chart had this bearish channel or bearish contracting wedge type pattern. We have broken out of that. You are looking at a potential retrace, which we've obviously observed from 3020. You have support at 3000 again, so that's something that we're going to watch and keep a keen eye out for. And you can certainly see quite a sustained move higher back up to the 3050 and obviously the 3070 potential gap fill zone. So again, that's something that you need to observe and keep an eye out for. Okay, for the remainder of the trading session. Okay, so inverted head and shoulders potentially, although you do have the unfilled gap at 2980, so all eyes on that zone. Okay, now in terms of the European S&P Europe 350, again, daily chart still remains bullish. Bullish consolidation as well. Okay, bullish consolidation here. Potential next level is that 1400 zone that we need to potentially clip. Now the DAX chart itself, again, two potential bottoming tails here now, and certainly supports the argument to go higher on the back of obviously QE. Okay, so all eyes on QE, and that's the focus that will remain. The 60-minute chart itself is still arguing for a potential inverted head and shoulders. Again, that unfilled gap at 9960 needs to close, and then you have a gap at 10220, and those are the two zones that we'll observe. The 10-minute chart certainly did close the gap below. This is the gap that I was referring to. The gap has closed now, so there's no real catalyst to propel the German DAX lower. So certainly keep an eye out at 9960 or 9640 level if you do revisit it. And the next zone that you are looking at above is the 9820, then obviously the 9900 zone. So certainly a bullish picture for the German DAX, provided we hold the 9680 to 9640 support level. Okay. Now the next MDAX, again, you are looking at potential exhaustion on the daily chart, certainly is a concern. 60-minute chart certainly wants to go higher though, okay, and you are looking at potential gap fill resistance for now, but again has that inverted head and shoulders formations type pattern, very similar to the Nasdaq, arguing for a move higher. Same type of situation or scenario here, although you do have a bullish argument on the tech all share, given the fact that obviously you've got talk of Twitter being bought out and Google earnings after the bell as well, and certainly an argument to move higher given the fact that we've negated this bearish candle on daily chart. So certainly a bullish argument here, up to potential gap fill in this zone here, and obviously a test of the 200 MA as well, where previous support equals resistance. So certainly a move or a sustained move higher here, which should help the German DAX higher. Now bringing up the chart of the French CAC. The daily chart, as you can see, you've broken out of that downward channel. You are looking for a potential thrust higher, and the next level is the gap fill at 4480. So all eyes on a gap fill from my perspective. Okay, on the actual CAC itself. Now the 60-minute chart, the French CAC, again, you just seem to be consolidating for now, a bullish consolidation, if that, and you are looking for the next resistance or next gap fill zone, which is at 4480 to close, and obviously one at 4640. So those are the two zones of the French CAC. So certainly a bullish argument here to be made. Again, you have an inverted head and shoulders formation. The French CAC on a 10-minute chart, yes, we are aware that there is an unfilled gap below. So certainly is vulnerable to that gap being closed. But from a technical perspective, yes, we've consolidated. We've put in a potential dual bottom and bottoming tails here now at 4350 zone. So 4350 will be solid support for the French CAC. So bear that in mind, okay? Understood. Okay, so with regards to the FTSE 100, let's just bring up that chart as well. Let's bring up a 10-minute chart. First of all, the market obviously pushed higher. We went into that 6070 zone. We've obviously pulled back, and you are looking at support at the 6030 zone. And then if that fails, and you are looking at 6000, and then again, you're looking at 200 MA, which is at 5980. So those are the two zones that you're observing, okay, for a potential thrust higher. Okay, now again, if we break above, it's 6070 is the first resistance level, and then you're looking at 6115. Bringing up a 60-minute chart, we're all aware that there's an inverted head and shoulders. As you can see, left shoulder here, head and right shoulder, and you're looking for a target at 6190. And so an argument can be made that this market still has yet legs to go and certainly wants to potentially move higher. So again, that's another zone that I'm going to be watching very, very carefully. Okay, now a daily chart of the FTSE 100, you can see that we are holding previous support equals resistance, although it is weak, if anything. You are holding that diagonal trend line, so again, there is scope to potentially hit that 6150 higher, and all eyes will be on there. Again, oil will dictate as well, given the fact that Brent is potentially into support. It will support the FTSE 100. Now, again, you have bullish engulfing. The second day's candle certainly consolidated within that green candle, and bulls certainly were in control. Okay, so again, 60-minute chart. It does have a mini H&S formation. It has played out to a large extent now. I've certainly taken my short position off the table in terms of the FTSE at the 6040 region. Okay, and again, we are looking for the next potential level. Again, if we do test the 5920 level, that's a screaming buy. And in this zone here as well, you are looking at potential support at the 6000. To the, well, based on this diagonal trend line, you're looking at support at 6000. In terms of the actual support based on previous resistance equal support, you're looking at support at 6010. So again, that's a zone that we're going to keep a keen eye out for. Okay, so very, very important. Understood. Okay, so that's the FTSE 100, and that certainly is a wrap up there. Again, this final 10-minute chart, again, resistance at 6080. If that fails, then 6120 is the next zone. So all eyes on the FTSE 100 in terms of the next potential move. Okay, so the Aussie and Kiwi certainly remaining bullish to a large extent, given the fact that you have the weaker dollar. Certainly seem to be persisting, and that obviously will help the QE and stimulus trade. Okay, and is certainly potentially putting a floor in the price of oil. And copper certainly is remaining bullish regardless. So certainly looking well. Now looking at cross-reference the FTSE 100 with the FTSE 250, again, certainly a bullish sign here. And you are looking at continuing with that inverted head and shoulders formation with regards to the FTSE. So certainly a bullish pattern here for the FTSE 100, and therefore you are looking at potential continuation or a potential reversal on the FTSE as well. So again, a lot of it will hinge on the movements in Asia once again, given the fact that the Nikkei was certainly higher quite impressively. It's the ability for the Shanghai index to stabilize, and then we can see a concerted and an impressive move in the FTSE 100. Now, we did see strength on the FTSE into the close, which really has been, well, not evaporated, but certainly has lost some steam. Given the fact that oil certainly is potentially holding support, then it should certainly bode well. The dollar index certainly is putting in a potential topping pattern, and you are looking at a potential gap fill below. 10-minute chart has a bear flag formation in play, looking to potentially thrust lower on Fisher's comments, which were very, very dovish. and that should help the indices potentially move higher as well. Okay, although the weaker US dollar, it has two potential scenarios. One, bad news equals good news. Okay, or alternatively, good news. Well, what should we say? Bad news equals good news, which is a stimulus trade. So therefore, the weak economic data today should be interpreted. It's probably already discounted in, given the recent drop in the US markets, and really is being understood as potential for a delay in the rate hikes, which in turn should help economic activity and therefore help the equity markets move higher. So can you see how there's multiple ways of looking at the potential outcome? So it certainly is a very, very tricky market right now. I will certainly whipsaw today, currently minus 43 points at the moment on my trades. So certainly not a positive day for me. I'll declare that. Certainly lost out my first 3 trades in the morning, and that set me back. And again, very, very hard to read. So the FTSE, I was stopped out I was whipsawed long, and I was whipsawed short as well. So certainly very hard to read the FTSE 100 today. Again, all eyes on OPEC, all eyes on China, all eyes on central banks, and we shall see what tomorrow brings. Goodbye now.